A very warm welcome to you, and thank you so much for coming to watch the video today.
Thank you. It's great to be here to discuss this.
Today, we are analyzing the DexCom Q4 and fiscal year 2025 earnings call. Our mission here is to really break down the company's prepared remarks, evaluate their overall financial health, and then we are going to go through the entire analyst Q&A session, question by question, to understand the future of diabetes and metabolic health tech.
Yeah, and to set the context for you, this was Jake Leach's very first earnings call as the official CEO.
Right.
Which is a big deal. It signals a major new chapter for them. If we connect this to the bigger picture, continuous glucose monitoring, or CGM, is at a fascinating inflection point globally. We're moving from a world where these devices were exclusively for, intensive insulin users to a landscape where metabolic health is becoming a much broader, proactive conversation for millions of people.
Okay, let's unpack this, starting with the company's prepared presentation before they actually open the floor to the analysts. Let's look at the financial results. How did DexCom actually close out the year?
They closed it out with some really serious momentum. Q4 worldwide revenue hit $1.26 billion.
Wow.
Yeah, which represents a 13% reported growth, or 12% organically. And breaking that down, U.S. revenue accounted for $892 million, while international revenue sat at $368 million.
And didn't they call out a specific country there?
They did, yeah. They specifically noted France as one of their fastest-growing markets, which is just a great indicator of expanding European access.
Right. And looking at the profit margins, things seemed incredibly healthy.
Absolutely. Gross profit margin improved to 63.5%. A massive driver of that was normalizing their freight conditions. I mean, during the pandemic, everyone had to rely on really expensive air freight.
Yeah, it was a nightmare for logistics.
Exactly. But DexCom has successfully reestablished their ocean shipping routes. They also lowered their product scrap rates on the manufacturing floor. But the headline financial number you really need to know is that for the first time ever in 2025, DexCom surpassed $1 billion in free cash flow.
That is a massive war chest for future innovation.
It really is.
Having $1 billion in free cash flow just gives you so much strategic flexibility.
Wow.
So looking ahead to the 2026 guidance, how are they planning to deploy that, and what are the projections?
So they're projecting 2026 revenue between $5.16 and $5.25 billion. That's an 11 to 13% growth rate. They expect that gross margin to expand even further to between 63 and 64%. Now, their operating margin is projected to be around 22 to 23%.
Which accounts for some specific spending, right?
Yeah, that operating margin accounts for some heavy investments they're making in a brand new manufacturing facility in Ireland, which is slated to open late in the year.
That perfectly sets the stage for Jake Leach's strategic comments. As the new CEO, he laid out 3 key priorities. The first one was premier glucose sensing for all.
Right, and the centerpiece of that priority is the massive U.S. rollout of their G7 15-day system. They noted this sensor has their greatest accuracy to date. Moving from a 10-day to a 15-day wear time means you are only changing your sensor twice a month instead of 3 times.
That's a huge reduction in user friction.
Exactly.
Which naturally bleeds into a second priority, setting the standard for customer experience. They dropped a lot of updates here, both in software and hardware.
They really did. On the software side, they're launching My DexCom account to streamline support. They also highlighted the early access launch of Smart Basal.
Can you explain that briefly?
Sure. For context, basal insulin is the background insulin people take to keep their blood sugar stable throughout the day. Smart Basal is software designed to personalize and simplify those dosing workflows for doctors and patients. They also announced Direct Electronic Health Record, or EHR integration, which is now live in over 160 health systems.
That makes a big difference for the doctors.
Huge difference. Plus, they are adding a comprehensive nutrition database for Stelo, which is their over-the-counter monitor for non-insulin users. And on the hardware side, they just received clearance for a newly formulated adhesive patch technology to ensure the sensor actually survives on the arm for that full 15-day period.
And the third priority was expanding international market share. Leach made a pretty bold statement here, noting that the international market could eventually be larger than the U.S. market.
Yeah, it's a massive claim.
To capture that, they plan to launch Stelo and another brand new CGM system internationally in 2026.
The global runway is staggering, and they are clearly building the infrastructure to go after it.
All right, now we're going to transition to the Q&A session. Wall Street analysts grilled management on all of these points, and we are going to cover every single question asked so you have the complete picture. Let's start with the first question.
Sounds good.
So the first question came from the analyst Matt Taylor from the firm Jefferies. A brief summary of his question. He asked about the big picture of the early glucose journey, future coverage, and what non-intensive type 2 coverage coming in the next 12 to 24 months looks like.
The company response to that set the whole tone. Jake Leach emphasized they're really in the early innings. Unlocking Medicare for type 2 non-insulin would open access to nearly 12 million people. He also noted the international opportunity is poised to be larger than the U.S. over time.
Let's move to question 2. The analyst was Larry Beagleson from Wells Fargo. A brief summary of his question is that he asked about the timing of CMS, meaning Medicare coverage for type 2 non-insulin, and when the randomized control trial, or RCT data, will be available.
Right, and the company response from Leach noted that the American Diabetes Association already updated guidelines recommending CGM for this group based on real-world outcomes. The 300-person RCT will read out in the middle or first half of the year.
Moving on to question 3. The analyst was Travis Steed from Bank of America. A brief summary of his question. He asked about the 15-day sensor rollout, its impact on margins, and using it to open new international markets.
For the company response, CFO Jeremy Sylvain explained the 15-day sensor helps margins slightly this year, but more in the future as the base converts. It allows them to build products at a scale and cost suitable for emerging markets. Leach added, it is simply their most accurate sensor ever.
Question 4. Analyst Robbie Marcus from JP Morgan. A brief summary of his question. He asked about operating expense guidance and where the company is loosening its spending in 2026 after a year of tight control.
The company response from Sylvain explained the spending is primarily for opening that new Ireland manufacturing facility in Q4. Hiring, training, and validation samples hit operating expenses first, then move to cost of goods sold once the facility is running.
Question 5. Analyst Danielle Antolfi from UBS. A brief summary of her question. She asked how to think about utilization rates as basal ramps up and non-insulin type 2 coverage is gained.
The company response had Leach breaking down the numbers. Automated insulin delivery users are greater than 90% utilization. Basal users are 80 to 85%. What's fascinating here is that, surprisingly, early registry data shows type 2 non-insulin users also have very high utilization, similar to basal users, as long as it is reimbursed.
Question 6. The analyst was David Roman from Goldman Sachs. A brief summary of his question. He asked for perspective on the 2026 revenue outlook and what factors drive hitting the 11% versus 13% growth range.
The company response from Sylvain clarified that the core patient base is growing at about 20%. Growth will be driven by unit volumes in the mid to upper teens, plus a couple of points of price, offset slightly by international and PBM mix. They don't need record new patients to hit the low-end guidance.
Question 7. Analyst Jeff Johnson from Baird. A brief summary of his question. He asked for details on the strengthening U.S. sensor uptake trends in Q4 and Q1 and the stability of the user base.
The company response from Sylvain attributed the better sell-through to reduced sensor deployment issues, lower warranty and complaint rates, and the 15-day launch. Retention of users remains highly stable.
Question 8. Analyst Marie Tibble from BTIG. A brief summary of her question. She asked how to think about potential pricing headwinds with the upcoming Medicare unlock.
The company response had Sylvain explaining that CMS typically uses a competitive bidding process, which naturally sets fair value, but he expects that pricing mechanism wouldn't kick in until around 2028. DexCom is actively building manufacturing capacity right now to be ready for CMS volume.
Question 9. Analyst Matthew O'Brien from Piper Sandler. A brief summary of his question. He pointed out a $2 billion revenue gap between DexCom's international business and its main competitor, asking how and when they plan to close it.
That's a huge gap. The company response from Leach noted they must go deeper into existing markets, like Europe, and expand in Asia-Pacific. Sylvain admitted this is a long-term vision taking more than 5 years, requiring entering entirely new countries and driving evidence for coverage.
Here's where it gets really interesting. Question 10. Analyst Jason Bedford from Raymond James. A brief summary of his question. He asked about the hurdles to adoption in the basal insulin segment and if smart basal is the tool to drive growth.
The company response from Leach completely agreed. He stated smart basal is actively piloting this month in select clinics. It seamlessly fits physician workflows to help patients find the correct insulin dose faster, which will absolutely drive market share.
Question 11. Analyst Michael Pollock from Wolfe Research. A brief summary of his question. He asked about the mechanics of the 2026 gross margin expansion and the hardware mix between the older G6 and new G7.
The company response from Sylvain noted that when the Ireland facility turns on in Q4, gross margin will actually dip sequentially because fixed costs move from operating expenses to cost of goods sold. Leach added the G6 is phasing out rapidly and should mostly be phased out by the middle of the year.
Question 12. Analyst Joanne Winch from Citi. A brief summary of her question. She asked for the exact revenue contribution from Stello in 2025 and what is embedded in 2026 guidance.
The company response stated Stello contributed $130 million in 2025. In 2026, it is expected to contribute about 1 point to total growth. Stello is also acting as an on-ramp for type 2 non-insulin users paying out of pocket before transitioning to covered G7s.
Question 13. Analyst Brandon Vasquez from William Blair. A brief summary of his question. He asked about the software innovation pipeline and if software features need to be validated in clinical trials.
The company response from Leach stated the goal is to remove user friction. They do validate features via clinicals or real-world evidence, such as their delayed high alert, which the sales force actually uses to show competitive differentiation.
Question 14. Analyst Josh Jennings from TD Cowen. A brief summary of his question. He asked for data on the G7 15-day durability, the new adhesive patch, and pharmacy rebate dynamics.
The company response from Leach confirmed the new patch brings a meaningful improvement in sensor survival. Sylvain added that the 15-day sensor is priced identically to the 10-day sensor, meaning the same revenue per month, and is capturing 100% of the rebate catalog with no changes to trends.
Almost through them. Question 15. Analyst Richard Neuter from Truist Securities. A brief summary of his question. He asked if the street's expectation of a 6% sequential revenue decline from Q4 to Q1 is accurate.
The company response from Sylvain confirmed a 6 to 7% sequential decline is a safe estimate. Seasonality is smoothing out as more business moves through the pharmacy channel rather than the durable medical equipment channel, which traditionally saw heavy Q4 stocking.
And finally, question 16. Analyst Zachary Allen stepping in for Bill Plavonic from Canaccord Genuity. A brief summary of his question. He asked for an update on the number of commercial covered lives for type 2 non-insulin users.
The company response from Sylvain noted they have chipped away at the market, moving from 6 million to roughly 6.5 million out of a potential 12.5 million commercial lives by securing smaller PBMs and individual plans.
So what does this all mean? We've covered the prepared remarks and all 16 questions from the Q&A.
It's a lot of information to process.
It really is. Can you synthesize the overarching themes for us?
Definitely. I think there are 3 main themes you need to take away. First, DexCom is aggressively transitioning to the G7 15-day wear time. This improves their margins and vastly improves the user experience.
Right.
Second, the company is bracing for a massive market unlock with impending Medicare coverage for type 2 non-insulin users. That is a market of nearly 12 million people.
Which changes everything for their scale.
Completely. And third, the global runway is vast, requiring strategic, country-by-country evidence generation to close the gap with competitors. They have a $2 billion gap to close internationally, and it's going to take patience and rigorous clinical data to win that coverage abroad.
It is a massive undertaking, but the potential is just incredible.
It really is. And this raises an important question for you to consider. If AI-driven software, things like smart basal and macronutrient logging, becomes just as vital as the hardware sensor itself, will the future of metabolic health be less about the physical patch on your arm and entirely about the digital brain interpreting your data?
That is an amazing point to end on. Thank you so much for watching. If you liked the video, please click like, share the video, subscribe, and stay tuned for upcoming content.